Good morning, everybody. I hope you're all well. $110 billion. That's what investors bid for $44 billion of U.S. government debt yesterday. Excuse me. Treasury sold the full amount. The 7-year stopped at 4.512%. Its coupon is 4.5, so the difference between those two numbers was tiny. That matters because the market paid almost exactly what Treasury asked for. The price moved, the ownership didn't. And that gap is the story today. I am Ryan Lafield. Today is Friday, August 28th. Thank you for joining Universal Asset Owners Live. Let's get into it. All right, here's where we're going today. First, the Treasury auction, $110 billion in bids for $44 billion on offer. And then we'll get into the book and look at who actually took the bonds. We've also got 3 corporate moves, 1 authorized, 1 without a price, and 1 actual cash deal. And then 1 clock to watch today. Kevin Warsh at Jackson Hole spoke this morning. We'll get to the rest as we go. But first, let's start with that auction. Here's why that auction mattered. As mentioned, the note carries a 4.5% coupon. The auction stopped at 4.512. That gap is tiny, like I mentioned. So Treasury had to give up almost nothing extra to get $44 billion out the door. The note priced just under par. That tells you buyers were willing to accept almost exactly what Treasury was offering. Not perfectly, but very close. And one auction doesn't give you a trend. It gives you a snapshot. Yesterday, that snapshot was pretty clean. Now the good part, who actually bought them? Investors bid more than $110 billion for $44 billion on offer. But the awards were nowhere near evenly split. Primary dealers bid almost $60 million. They were awarded just over $5 billion. Direct bidders took about 27%. Indirect bidders took just over 60%. And one thing here is worth clearing up. Indirect does not mean foreign central banks. It is Treasury's label for bids that come in through a dealer. That's a routing category, not a nationality. Retail was barely in the picture, about $21 million. So this was overwhelmingly an institutional book. And the dealers, they bid the most and got the least. Quick one here. You'll hear the phrase bid to cover ratio around Treasury auctions. And it means this. How many dollars were bid for every dollar Treasury actually sold? Yesterday, that number was 2.5. So for every dollar Treasury sold, there were about $2.50 in bids. But here's the part I'd keep in mind. A big cover number tells you there was a crowd. It does not tell you what price that crowd was willing to pay. That's why the stop still matters. Cover tells you how many showed up. The stop tells you where the auction actually cleared. 2 different questions, both useful. Let's move away from the auction for a minute. 3 corporate moves today, and they are 3 very different kinds of deals. First, Workday. Its board authorized $4 billion of share purchases. Authorized, not spent. That's permission to buy shares, not proof that $4 billion has actually gone out the door. Second, Mubadala Capital is taking a majority stake in Arrive Logistics. No price was announced, so we're not inventing one. And third, Diodes bought ElevATE Semiconductor for $250 million in cash. That one is priced. That one is done. So you've got 1 authorization, 1 control deal with no announced price, and 1 clean transaction. 3 headlines, 3 very different stages. Now let's pull back for a second, look at the risk radar today. If you're a universal owner, you probably didn't decide to buy yesterday's 7-year auction, but you already own the asset class it helps price. That's the distinction. What moved yesterday was the price of duration. What did not move was the mandate. The allocation didn't change. Voting rights didn't change. And there are two other numbers on the board today. The 2-year was at 4.19. The 10-year was at 4.66. The 7-year auction landed right in between. Then there's the plumbing side. Reserve balances at the Fed were about $2.92 trillion. Treasury cash was about $959 billion. But keep those separate from yesterday's auction. That's Wednesday's print. It's not Thursday's auction talking. And one thing on the calendar. Kevin Walsh was scheduled to speak today at Jackson Hole this morning. That's as far as this brief takes us so far. No reaction yet, no interpretation, so we'll leave it right there. Real quick, here's an update to a story from earlier this week. Tungsten West. You might remember the UK's National Wealth Fund announced its investment in the company on Tuesday. Well, this morning, we got the next step. Tungsten West says its short-term loan has now been repaid in full. So, old short-term loan paid back. National Wealth Fund debt facility now effective. And those are two different financing instruments. One is finished, the other has now kicked in. So this isn't another announcement of the investment. It is the next step in putting that financing into place. I have two quick dispatches before we bring this home. First, Karachi, and then Nigeria. These aren't the main story today, but they're worth keeping on the board because both are reminders that capital doesn't move in isolation. Policy, infrastructure, access to financing, all of it matters. Two places worth watching. And that's all I want to do with those today. Flag them, keep them on the radar, and move on. Before we get to the back page, here's today's allocation nobody made. Think about this. Every large pension fund in the developed world that tracks the right bond index just picked up a piece of that 7-year Treasury. Nobody necessarily sat down and chose it. No big investment thesis, no conviction call. The index rebalanced and the allocation happened. No memo, no vote, no conviction, just the mandate doing what the mandate does. Finally, the back page. This says the coupon moved a little, the stop moved a little, the rights didn't move at all. And as usual, the back page nails the theme for today's briefing, as it always seems to do. And before we go, let me remind you that Universal Asset Owners reaches a pretty specific audience. 98% of the world's sovereign wealth funds, 18 of the 20 largest pension funds, all 10 of the 10 largest charitable foundations, 85% of the largest family offices, and more than 100 billionaires. Altogether, it's more than $50 trillion in permanent capital. And the daily brief here is free. So come join us. universalassetowners.com. That's it for today. I am Ryan Lafield. Thank you for watching as usual, and wherever you are in the world, I hope you have a great rest of your day. And keep looking for the signals. We'll see you on Monday.